If you're a business owner and you're struggling getting results when it comes to trading, here's a step-by-step guide how you can improve any trading strategy. Solid. So I prepared here something, and people concentrate too much on trading tools and trading platforms. I mean, there's a trading platform where literally your stop is being executed also if you don't have any internet connection, what is very nice. What is like 11 times faster, or like a trading tool, for example, where you can see some secret information in the market. But actually what matters is the way that you trade on the current market condition. Can you really for each signal adjust $100 and maybe get $500 out? Or are you currently adjusting $100 to get just another $100 out? So if you have just like 5 losing trades and 5 winning trades, it will just do a different math, and the one is going to earn money and the other one doesn't. The other one is that there are different kind of market phases, and if you understand that the market is sometimes for 1 or 2 weeks just consolidating, not moving that much, but you're placing 20 or 30 trades a day or a week, the problem by that is the money management is totally off. That means if you, for example, say instead, you know what, we're placing $100 a trade in average, we want to get out every time we trade at least foreseeable that we can get $500 out. I'm going to show you this one on the chart. And if it doesn't work, like if the trade has reached $350, then we want to manage very aggressively, because what if we can see something that the market is going to revert, for example, we don't just want to lose the $350 that we made and just exit the trade. So that just on average we have 1 to 5. It means like we adjusted $100. Sometimes we made $300, sometimes we made $350, $400, but sometimes we also want to make sure that we can have $500, right? So as you see also with the money management, and this is also depending all on the asset. That means if you trade on a stock market, you need minimum $25,000 on the account, or else there is a specific rule that you're only allowed to place like 5 trades a week or so. And if you trade options, I see the problem there is the money management is very off. That means you just trade with a $10,000 account and lose just with a single trade $1,000, $2,000. But if you trade futures or with the CFD, I recommend futures. What is really cool with the demo account first, you can literally say, you know what, I'm gonna take $100 a trade, 2 trades an average a day. And if you place 2 trades over that day, you're risking $200 in the market. But if you can make with each trade $500, $300 in average, then literally it's like you invested $200, but you made $300 or $500. So you get a better return than what you invested. If you place, for example, 10 trades with $100 each, but you just make like 1,100 or just like $900, then the problem is you just invested to lose, you just risk to lose literally like $1,000 because 10 times $100 a trade. And the return is just like not that nice, right? So the asset is something what is very awesome. On futures, you have very good money management. It's about like how many signals do you get per week. I see a lot of people, they backtest. That means like they backtest 24 hours. But actually they are, for example, if you're a business owner and you're just like 2 hours or 3 hours on the computer, maybe 2 times, 3 times a week in average, then the thing is you're just not 5 times a week on the computer for 4 or 5 or 24 hours. And it is just impossible within 24 hours to select the best signals. So what is just more important is that you make sure that you sit down on a computer. So for example, if we just take here the 1 minute chart and the S&P 500 future, you go here by 10 to 11 a.m. for example, if that's the time you're able to trade, for example, like here, 10 to 11 a.m. Or let's just take another day, like let's just take here, any other day that you like and where you are available. For example, we take here now 10 to 11 a.m. And then it's very important to search between 10 to 11 a.m. If you just look here at multiple days, how many days there were you able to see good trading opportunities? That means where on what day are you able here to see good trading opportunities? For example, if we go here between like 10 to 11, here you see the market is more obvious trending than just the day that we saw here before, between 10 to 11. And then here already, if your trading setup is just a green and a red candle, or the opposite, so red and green, if that is your setup, here you find, for example, if you would enter the trade after a green candle and the stop placement under it, you find a risk reward ratio of 5. That means that's a $500 opportunity trading to the side. And then you can also find similarities, like you can see from here to here, the market just did a retracement and linked. And this linked here is almost the same, which just shows you that it makes sense then to trade that. That means when you, for example, see that the market is going up, have this high here to aim, you see the market does an average like this link down, and you see it does this link again, and does here just a green candle. And if this color switch is small enough that when you enter here to trade with the stop placement here, that this is $100, that this is $500 up here, that's just a trading opportunity. But it's just important not to take every trading opportunity, because you want to understand that when you go here, for example, by each candle for a day, this is the 1 day chart, that there are sometimes 1 week or 2 week phases where the market is just staying in one price area, and sometimes you have a whole week, as you can see, where the market is pushing obviously to a bigger structure high here, for example, as you can see up here. And then it makes it just more easier to trade in this area than, of course, like in this area where the market reached already a high. So that means trading upwards always before the market has reached a high of very bigger structure, as you can see here, or a low, is something what is just making our trading just way more efficient. There are people out there, they love to play signals. I don't like to play signals, because a money-making activity is just if you are available and you can trade just 1 or 2 hours and you're just sitting on a computer, then it's just all about how many times are you able to see your signal, what is just very, very, very important. Okay, let's get back here. So as you understood right now, so that means like in your time, when you're always available, you want to have enough signals, that you have also time efficiency, the money efficiency with the risk reward ratio. Market phases, that means on a budget over 5 weeks. Let's say, for example, let's take like $5,000, $10,000. Let's just spray it over 5 weeks. We want to make sure each week we maybe want to play sometimes 3 to 7 trades, right? Sometimes 7 trades, 8 trades, sometimes just 2, 3, or 4 trades, because the market is not moving that much, or maybe even none. And then also a daily loss limit, because if we say, for example, we place 2 trades a day in average, and a maximum in average will be good, but we can make $500 with each shot, then it's already setting you up for success, because it's like if you have 1 winning trade to make $500 and 1 losing trade, and then you just made like $400 a day. Then the thing is just you just invested $200 to make $400 or even more. And if everything goes worse, you just invested $200 and you just maximum lost $200, and maybe it's just let's just say you just took like $4,000, for example, over 5 weeks, right? So you have like $200 a day, $100 a trade, and for each trade before it works like to a specific point, that means to a specific high or low. That means here you have a high, and here you have, for example, a bigger structure low, just as an example. And when you see then the market is very near to a bigger structure high, as you see here or there. And you want to see then that it makes sense that when you have a color switch, for example, this is something what I really love. It depends on the trading strategy that you have, that when adjusting here $100, that to this high, there's a $500, $600 opportunity. This is called a risk reward ratio. And then when the trade is already at 1, 2, 3, that means when adjusting $100 and a $300 front, here we want to manage very aggressively to look forward if it works, because there's something that is called a risk reward ratio spreadsheet. You can find it just online. It's pretty simple to find. And let's just assume you place $100 a trade. Let's just assume you place like 100 trades that year, for example, or you can also go here by 50 trades that year, what I think is way more better. And the strike rate is how many trades worked out of 50 trades. So for example, if you have 10 trades and 3 trades worked and 7 didn't, your strike rate is going to be 30%. And after teaching 100 students, 30% to 40% is something what is very realistic. So that means if you have a trading strategy with 1-to-1, as you can see here, you would lose a lot of money. The chance is very high. But having a risk reward ratio of 2, this is already where it goes a bit green, but there's also human error in between. That means there will be trades that you place after the trading strategy, but there will be also trades that you place and they are literally not based on the trading strategy, and this is something what is absolutely normal. You can see a risk reward ratio of 3, and here are 3.5 and 4. So this is the average what I foresee, what is realistic for a beginner. And you can see here, after placing 50 trades, the trader can make it 1,000 to like 2,500 or up to $4,000. And with the $10,000 account, and even when just going by 40% strike rate up to $7,000, $5,000 here. And I think this is very good, because this is almost duplicating a trading account within like, let's just say like 3 months or like 5 months or 6 months. Just putting the work in first, learning how to trade a $10,000 account. And once you're able to learn how to trade, for example, a $10,000 account, then you're being setting up for success to be able also to trade a $50,000, a $100,000, a $200,000, or even $500,000 account then, because it's important just to learn it small first, that you're holding yourself accountable to the trading strategy, and then afterwards you see like every week or like every 2 weeks you see like you're placing trades, you're just making money, more money comes in than you put in. Like as I just said, with the dailies, also with the weekly or with the 5-week period, like 20 trades, like you put in $200 a day in average, for example, with $100 a trade, you get $500 on average out. You just make way more money than you always put in. Then it's literally to increase. So it's literally setting you up for success to also how to trade a bigger account. I hope you can use this for your own trading account. Wish you all love, good trades. JT out.